And I think the $50 high is a joke right now. That could come out in 48 hours or the next 2-3 weeks or whatever. But in the next handful of months, I think the move up in silver will be so dramatic that people will just...
You're watching Silver News Daily. Subscribe for more.
Silver isn't just rising, it's detonating. The price action we're seeing right now isn't a rally, it's a rupture. And according to one of the top technical analysts in the space, silver has officially entered what he calls a jaw-dropping acceleration phase, with the first quarter of 2026 now marked for a 100-plus price explosion. This isn't just a prediction, it's a warning. Because while silver surges, something much darker is brewing underneath. A historic market mistake is being corrected in real time, and that correction is setting off a chain reaction. Stocks are teetering at the edge of collapse. Bitcoin is echoing the exact setup we saw before the 1987 crash, and gold? It's now targeting $8,500. But it's silver that's going to move fastest. Why? Because silver's not just a precious metal anymore. It's the pressure valve for a financial system that's finally running out of air. What we're witnessing is the unwinding of decades of mispricing, suppression, and ignorance, all culminating in a tantrum that's already started. But very few are prepared for what's next. Stay with me, because by the end of this, you'll understand exactly why the silver market just crossed a line it cannot return from.
In a upcoming report, I think it's too low. Silver has already entered an acceleration phase in its trend, and similar events, technical events like that, and they could be defined, occurred back in '79 on the way to the 1980 high, and also in 2010 on the way to the 2011 high. Now, both of those highs were roughly around $50. So everybody in the world knows, oh, silver's hit a high twice at 50. And if you just stand back a bit and think about it, gold's way above its 2011 high. Even copper right now, on this pullback in copper, is still trading above its 2011 high. Metals, like I think I looked at a zinc chart the other day, or was it 10? I forgot. Above its 2011 high. And silver, I guess, just going to stay below the 1980 high and 2011 high forever. It's a dog. Okay, right. Or something's wrong. Something is wrong with the pricing of that market. And we all know, if you've been in markets long enough, some markets can get overpriced vastly and stay there, and yet seem so sane. And then when they implode, you say, oh, golly, it was a bubble. Now I understand. That guy was right, The big short guys, remember, they said they were going to collapse. The mortgages finally did collapse. Or a market gets bashed down so low and stays low for so long that people just write it off. Like, it's never coming up. It's mired in mud. It's something's wrong with it. Those can be mistakes, market mistakes. And when a market makes a mistake and finally realizes it's made a pricing mistake, not all markets move rationally, remember, okay? It can often compensate even more so, getting back to what it should have done already, okay? And if you factor in such fundamentals as the real value of the underlying money unit, in this case, let's say the dollar, same applies to the euro and the yen and so forth, fiat pieces, nothing backing them, they decay in value every decade dramatically in real buying power, because the quantity almost doubles for the dollar, for example, every decade.
Silver just broke above $44, and that single move has flipped the entire script. This wasn't some random uptick. This was a confirmed technical breakout, a decisive signal that we've left the accumulation zone and entered an entirely new phase. By the end of September 2025, silver was trading just under $46, having rallied nearly 50% year to date. That kind of movement doesn't happen without serious momentum behind it. Analysts are now drawing comparisons to the legendary rallies of 1979 and 2011 because the structure we're seeing today is eerily similar. Back then, once silver broke its resistance levels, it didn't stop. It went vertical. And today, we're watching history echo in real time. That breakout at $44 wasn't just another number. It was the neckline of a massive technical formation years in the making, and smashing through it confirmed what experts had warned. The impulse wave has started. Technical analysts are now calling for near-term targets at $48, but more importantly, they're watching for silver to challenge and break $50 because that's where things go parabolic. Price action is validating wave counts that signal not just further upside, but the beginning of a multi-stage surge. The key takeaway? We're not waiting for a breakout anymore. We're in it, and this is just the beginning.
It's about 90% increase in the supply of dollars. So, like I've probably said this before, when your granddad built a house, it was $4,500 medium home price. Now it's $450,000. Okay, get the point? Okay. Another way to express it is 25, quarter of a century years ago, quarter of a century ago, same month, September 2000, if you bought the S&P, you're up 3.5-fold right now. Okay. If you bought gold, you're up over 11-fold. Or 12-fold by now. It's held its value and stayed ahead of the decaying money unit that we use to measure things. Whereas some things have just barely kept up with it, like the stock market. Even though they look good on the price chart, it really isn't keeping up with the real value of the underlying unit. Well, silver was $50 in 1980. You want to try to compensate for that, for the real decay in the value of the money in it? Would probably be $200, $300 just to match that price in real dollar terms. Now, forget that. That's not a technical, that's just a fact. Silver's been vastly underpriced relative to gold, underpriced versus other metals for too long, and it's waking up. And when it wakes up, it's likely to have a tantrum. And the tantrum has only begun. We thought, based on one or two factors that I could identify, that maybe we'll find some profit-taking resistance in the 60-70 zone after we burst through the 50, run all the buy stops, the latecomers. Frankly, looking at more soberly and looking back in time, measuring this type of move, it wouldn't shock us that silver's in excess of $100 sometime in the first quarter. Okay. And getting there will be obviously rapid. We're in one of those phases now where silver's not only going to catch up to reality, catch up to what some base metals have done, catch up to gold, it's going to beat gold. It's already been beating gold this year. In fact, silver's up double digits more than gold's up year to date. Much of that occurring since April. Gold went into this, sideways, silver went vertical. Anyway, I think we're in an interesting time, and that's one of the factors in markets I'm most focused on.
Right now, silver is hurtling toward its most critical threshold yet, $50 per ounce. But this isn't just a psychological milestone. It's the ignition point. Technical analysts across the board agree that $50 is the level that could unleash a wave of institutional buying, FOMO speculation, and algorithmic momentum trades that push silver into an uncontrollable vertical surge. And we're close. Very close. With silver recently hitting $46, it's already sliced through layers of resistance like a hot knife through butter. The next target is $48, and once that's cleared, the only thing standing between silver and the financial stratosphere is the final resistance wall at $50. But here's the thing. This market isn't behaving normally. It's accelerating. Momentum indicators like RSY and MACD are flashing classic impulse signals, patterns that typically precede explosive price action. This isn't consolidation, it's preparation. And when that $50 barrier breaks, it won't be orderly. You'll see leveraged traders pile in, short sellers scrambling to cover, and retail investors chasing a train that's already speeding away from the station. Analysts are calling it the most asymmetric trade in the market right now. Because if silver breaks $50, it doesn't go to $55 or $60. It leaps to $70, $85, maybe even $100 before the market has time to catch its breath. And this is all happening against a backdrop of monetary disorder and collapsing confidence in paper assets. Silver isn't just approaching $50, it's threatening to obliterate it.
I'm not sure of that. I know they could because technically we ran a spread chart, meaning divided the price of SIL, the popular silver miners ETF, against the price of an ounce of silver. And when you express that as a percent, you get a chart, okay? And it has technical attributes to it that suggests that you're pressing toward a breakout level right now, meaning a breakout in performance of the miners versus gold. You know, and in contrast, for example, SIL right now is still $20 or so short of its 2011 price high, which was like $90 plus, okay? GDX, the gold mining ETF, is above its 2011 high, just like gold is, and yet the silver miners, just like silver, are below their 2011 high, and we can see the catch-up occurring quickly. And also, silver miners are at a point of breakout in performance, I'm talking about, versus the gold miners. So we're emphasizing silver. We think that it will outperform gold, and we think the silver miners will outperform the gold miners. And the question you're asking, will the silver miners beat silver? It's possible for a while. I don't think it's a big issue. I think the main emphasis that investors in the monetary mining sector should look at is emphasizing silver side of that equation. Just like in the bullion area, I'd emphasize silver. I think the percent gains you'll see there will handily beat gold over the next couple quarters, especially.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
For decades, silver has been the market's forgotten metal, ignored, undervalued, and suppressed. But that's exactly why what's happening now is so explosive. Because this surge isn't just about momentum. It's a violent correction of a mistake that's been building for over 40 years. Silver has consistently lagged behind gold, often dismissed as a sideshow to its more glamorous counterpart. But look closer, and the imbalance becomes undeniable. The gold-to-silver ratio, a powerful measure of relative value, has spent years hovering at extremes, signaling one thing: silver is criminally underpriced. And 2025 has made that crystal clear. While gold has climbed about 15% this year, silver has skyrocketed nearly 50%. That's a 30% outperformance, and it's just getting started. Analysts now argue that silver's true value has been artificially suppressed by decades of financial engineering, distorted pricing mechanisms, and a lack of mainstream recognition. But that dam is breaking. Institutions are waking up, funds are reallocating, and for the first time in a generation, silver is being revalued not just as a commodity, but as a monetary asset, on par with gold. The narrative is shifting. Silver is no longer just the cheaper metal, it's the higher upside play. As capital rotates into hard assets and the world scrambles for real value, silver is emerging not just as a hedge, but as the correction. A $100 price tag doesn't just reflect technical momentum, it represents justice. A recalibration of a market that's finally being forced to admit what it got wrong, and it's doing it in real time.
Reanalyzing closely the development of that upward process in the late 70s to the 1980 peak, and then also in the bull market that had been going on for a decade in silver up to 2010, and then suddenly it said, that's it, I've had enough. It went straight off the page. It did it in what happened in both those markets, and this is true with other markets as well. It's not just looking back at silver. But when you go into acceleration phases in markets, what you see in the final couple of quarters, and I don't mean that we're going to top at that point. I'm just saying right now, the next couple of quarters is so dramatic that it drops your jaw. And it's not uncommon. In other words, when you get into these phases, and that is fairly uncommon, but it's not uncommon that when you get in those phases, you do what I'm talking about. And in terms of multiple gains, it's merely replicating and getting back to even somewhere near the real dollar value that it has saw in 2011 or certainly 1980. And also, like I said, certain other base metals and gold is well above its 2011. Why is silver the dog? Is it really a dog or is it a mistake? And I'm arguing this is one of these market mistakes that we see. And when they get exploited, they're worth exploiting. Undervalued, huge buy. Overvalued, huge short. And that's what I think silver's in right now, and I think it's going to compensate for it. But it's not going to do it in a way that is leisurely. Where, I'll have to think about this. Don't think too long. It's already said I'm accelerating. And I think the $50 high is a joke right now. That could come out in 48 hours or the next 2-3 weeks or whatever. But in the next handful of months, I think the move up in silver will be so dramatic that people they'll be jaw-dropping.
While silver itself is breaking out, silver mining stocks are still sitting in the shadows, but not for long. The disconnect between the metal and the miners is so glaring right now that analysts are calling it one of the most undervalued trades in the entire market. Just look at the numbers. The SILETF, which tracks silver miners, is still trading 20% below its 2011 peak, while the GDX, which tracks gold miners, has already blown past its own. This isn't normal. Silver is up nearly 50% year-to-date, yet the miners, companies that extract, refine, and sell the very metal that's exploding, are lagging behind. And that gap is about to close with force. Technical indicators on the mining ETFs are lighting up. Relative strength indexes are reversing hard, volume is surging, and breakout patterns are forming against both gold miners and the broader market. What this means is simple. Silver miners are positioned for a slingshot move. Historically, when silver runs, the miners don't just follow. They amplify. In the 2010 to 2011 bull run, many silver stocks didn't just double. They went up 400%, 500%, even 800% as investor capital piled into high beta plays to chase silver's upside. The leverage is immense. These companies are essentially call options on silver without the expiration date, and right now, they're dirt cheap. As silver breaches key resistance levels, institutions will begin rotating capital into mining equities to maximize exposure, and when that money floods in, it won't trickle. It will explode. The setup is undeniable. Silver is already moving, and the miners are next. The smart money is already watching. The question is, are you?
For the stock market is a major bubble in history of U.S. stock markets. No other bull market has had this kind of multiples over this period of time, and it is largely due to, look at an M2 chart, you'll see the growth, it's parabolic, and it's simply keeping up with the decay in the money unit. But and for 15 years, we've had free money 10 of those 15 years. And even when they raise rates to 5%, I'm talking the short end of the market now, and you go back 75 years and look at a Fed funds rate chart, even that 5% is in the lower quadrant of the past 75 years of rates. So we've had, in effect, what I call a Cheech and Chong rally, high on drugs the whole way. And a lot of that money flow went into the stock market to an excess. When those bubbles break, they're horrendous, because errors are exposed, and you don't need a new headline to take it down, like a war in Europe or something like that. It will go on its own because it is done something excessive, just like we've been talking about regarding silver. It's done something that's excessive and prolonged, and when it makes up for it, it's dramatic. I think the stock market, by the way, right now, when we look at its metrics in the weekend report, we had I think it was a 100-day moving average oscillator. And it has structure that we're about to challenge right now as you and I are talking. A little about another 0.5% below where we are. You're going to trigger a structure that you cannot see it on the price chart, but you can clearly see it on the momentum chart. It's a floor that's been used like 4 times on momentum since July, whereas on price you have this upward incremental crawl ever since we got above the January, February highs in the S&P, which is like 6140. Everything since then has been like 0.25%, 0.5% week, et cetera. Incremental, yet new highs. But during that time, momentum has built a floor that says, you break me, I'm going to take you down. Now, the problem is if you're long the stock market, we're arguing we've been in a developmental top process since late last year. Yes, new highs that occurred in 2000, mid-2000, after we predicted a high in January. It occurred in October of 2007 after we'd predicted high occurring at a certain target zone. That was a Fed rate cut that helped cause that high, just like we just had. You don't want to get back below the prior high. Well, for the S&P, that's 61 plus. Right now, we're pushing towards 6,600. Well, we're talking, not a lot of percentage points. So if you get an intermediate term break in the stock market, everybody says, oh, that's fine. You don't want to get back below that January, February high, because if it does, then you're saying, oops, that wasn't the breakout I thought it was. It's a failed launch. That's when you get into the deeper stuff. And I think that's likely to occur. And when it does, it will have wave effects.
The silver surge isn't happening in a vacuum. It's unfolding against the backdrop of one of the most dangerously inflated stock markets in history. This is a market pumped full of cheap money, reckless speculation, and blind optimism. And now the cracks are showing. Margin debt is at record highs, retail trading activity is off the charts, and options markets are saturated with leveraged bets on continued growth. But what happens when that growth disappears? What happens when the liquidity that's propped up the entire system dries up? That's when silver takes center stage, not just as a commodity, but as a lifeboat. Momentum support levels on the S&P 500 are flashing red. The index is clinging to the 6,600 level, while the NASDAQ 100 is teetering at a technical precipice. These are not just numbers. They're the final lines of defense before a cascading sell-off. And when that unraveling begins, the rotation into hard assets will be swift and violent. Silver stands to benefit more than any other metal because of its unique dual role. It's a monetary hedge and an industrial necessity. That combination is rare, and in a panic, it becomes priceless. Investors aren't just looking for safety anymore. They're looking for leverage against collapse. Gold is strong, but silver is explosive. As the stock market bubble deflates under its own weight, the same forces that once ignored silver will rush into it, desperate for protection and upside. The panic playbook is already being written. And silver, it's on page 1.
First off, Bitcoin, 10 years ago, this wouldn't have mattered, even if Bitcoin had a sharp break. And it had some big collapses, since it started trading futures in, was that 2017, I think it was. They didn't matter because it was off to its side. Now Bitcoin, remember, it's 57, I think, percent of the overall crypto market. So it's the king. Okay. Even Ethereum, everybody likes to look at, is only 13% of capital weighting of that arena. But Bitcoin's become entrenched now financially. So a lot of companies have been involved in that thing. And therefore, if it breaks down in a surprising way, they're going to get ambushed financially because they're hip deep in it. And that was not true 5-6 years ago. So it didn't matter then. Now it matters. And when you overlay a chart, it's a simple technical tool. Get a monthly chart of the NASDAQ 100 to go back to the 2021 high. NASDAQ 100 made a high in November 2021 and then dropped to 2022. Bitcoin peaked in November 2021 and dropped into late 2022, just like NASDAQ. Then they both went up together almost month by month. If Bitcoin breaks, don't be shocked if NASDAQ 100 it follows hand in hand, not necessarily as sharply because Bitcoin has a momentum trend structure below it, not evident on the price chart, that is identical to the 1987 S&P chart, momentum chart, before it crashed. And I'm arguing that Bitcoin right now trading at 112,000, a recent traded low was in the 107,000s. You get back down to that 107, actually about 109,000 next week. You start breaking one of our big structures, and you get down to 101,000, it's over. You could get an implosion. That would ambush investors. And I don't mean just Bitcoin investors, but it would have a wave effect on the stock market because of the linkages now.
While Wall Street clings to tech stocks and crypto narratives, a disturbing pattern is emerging. one that eerily mirrors the crash of 1987. And the asset flashing the loudest warnings? Bitcoin. Analysts have dissected the recent structure of Bitcoin's chart and found it almost identical to the setup that preceded Black Monday, the day the Dow plunged 22% in a single session. High leverage, euphoric sentiment, parabolic price movement, and now a stall. The resemblance is uncanny, and the implications are chilling. Because just like in '87, this isn't just about one asset. It's about a psychological breaking point across the entire speculative complex. Bitcoin isn't behaving like a stable store of value. It's behaving like a bubble gasping for air. And if it collapses, the ripple effect will be massive. Investors will panic, liquidity will vanish, and capital will rotate fast. But where does it go? That's where silver enters the spotlight. Because when crypto cracks and tech implodes, smart money doesn't sit in cash. It hunts for real assets. And with gold already pushing all-time highs and silver still massively undervalued, the shift could be dramatic. Silver isn't just a beneficiary of crypto collapse. It's the next in line to absorb the capital exodus. History has shown us that when speculative bubbles burst, money seeks tangibility. In the wake of the 1987 crash, hard assets outperformed, and today the setup is even more favorable. With silver positioned for a technical breakout and institutional recognition finally shifting, a Bitcoin implosion could serve as the exact catalyst that lights the fuse on silver's next leg higher. The next crash won't just be painful, it'll be directional. And silver is where that direction is pointing.
Gold to go up, especially when the stock market starts to break and panics the central bank even more than it's ever been panicked, not just ours, but others. Gold will go, at least there. And I think silver will vastly outpace it, as I've said. But that's just getting back to what it's done twice before. So people who are saying, they're looking just at what's happened in the last 10 years, especially the last year. It looks vertical. But when you look at those other charts, the game is we're not even halfway there. And we have yet to go vertical in a way that is really comparable to what those did. So I would tell those people, and I saw one of those headlines this morning, some major bank said the same thing. Oh, golly, it's looking like, the verticality is overdone, et cetera, et cetera. You haven't seen the beginning of it yet.
Here's what most investors still don't understand. This isn't just a demand story. It's a supply crisis. Silver isn't like other commodities. You can't just ramp up production when prices spike. Why? Because nearly 70% of all silver mined globally comes as a byproduct of extracting other metals like copper, zinc, and lead. That means even if silver hits $100, producers can't suddenly flood the market with new supply. The output is chained to the mining cycles of entirely different industries, and that structural bottleneck is now becoming the most powerful force in the entire silver bull case. Physical inventories are already shrinking. Premiums on coins and bars are widening. Industrial users are locking in long-term contracts to secure supply before the squeeze intensifies. And as demand keeps rising, fueled by solar panels, electric vehicles, 5G networks, and now monetary hedging, there's simply no way to meet it. The elasticity is gone. The market has no breathing room. And when an asset with no real supply flexibility gets hit with a demand shock, prices don't just rise, they launch. This is what makes silver unique. It's not just running on hype or sentiment, it's being physically cornered. Even central banks and institutional buyers are beginning to realize that once the floodgates open, there may not be enough metal to go around. And unlike gold, which has vast above-ground reserves, silver is consumed. Once it's used, it's gone. The setup we're watching unfold isn't a temporary squeeze. It's the early stages of a structural reset. And when that disconnect between supply and demand reaches its breaking point, the price action will be unforgiving.
No, a fundamental guy I appreciate very much, Eric Sprott, might call him the king of silver right now. He thinks it's good a couple $100 an ounce. And I see no argument against that, frankly, ultimately. I'm just talking in the next couple months. I think, seeing 100 wouldn't shock me. And frankly, once you get into white knuckle flights like that, where a market has made an error for decades, and then suddenly says, I'm out of here. It's very hard to make accurate technical predictions. We come up with that plus 100 level simply by replicating certain other phases in those prior bull markets on a ratio scale. But silver's vastly undervalued, as we've said, relative to gold, relative to copper, relative to the commodity complex. It's been mistreated, and that's a major error. There's no fundamental reason for it to have been mistreated. Its supply-demand situation is tight. It's remained tight. There's no excess in terms of supply. Supply is barely matching the increasing demand. And one of the unique things about silver on a fundamental basis, and I try not to get into it too much because we're technically based, but much of silver comes out of the ground not from miners that are motivated by the price of silver. They're producing zinc or copper or something else, and silver is a peripheral product. So even if silver went ballistic, it's not a primary motivator for them to pump out more copper and zinc so they can get hold of that silver. You get the point. So most markets, if you take the price of grain up, the wheat farmers are going to make more wheat, or copper, mine more copper. But silver is a unique position where, the silver miners are narrowly focused. They will benefit directly, but they don't produce the bulk of the silver production. Comes from copper mines, zinc mines, etc. And so silver's got a real unique fundamental argument going for it as well.
Everything we've just covered, from technical breakouts and minor leverage to stock market fragility, Bitcoin echoes of 1987, and the looming supply crunch, points to one inescapable conclusion. Silver's $100+ explosion isn't some wild forecast. It's the logical endpoint of a system-wide revaluation. We're not just witnessing a silver rally, we're watching the beginning of a financial reset. The mainstream is still asleep, distracted by headlines and hollow narratives, while the real shift is unfolding beneath their feet. And when it fully erupts, it won't be polite. It will be sudden, violent, and historic. Silver is no longer the metal of last resort. It's becoming the first response. Institutions are waking up, physical supply is evaporating, and a generation of investors is about to realize that the safe play was never in paper assets or speculative tech. It was in owning something real. $100 silver isn't a ceiling, it's a checkpoint. And the journey beyond it has already begun. If you want to stay ahead of the reset, don't just watch, prepare. Make sure you're subscribed so you never miss what's coming next. And remember, this is not financial advice. Always speak to a professional before making investment decisions.